Hey everyone, welcome back to VolProfit. I'm Shawn, and today I'm going to show you the real X-ray vision of the market, volume profile. If you've been trading using just candles and moving averages, you're basically looking at the surface. Volume profile shows you where the big players are actually loading up or unloading their positions. Now, a lot of people confuse volume profile with TPO. That's the time price opportunity chart. So before we go deep, I'll show you exactly how they're different and why I personally prefer VP for volume-driven strategies. By the end of this video, you'll know how to read VP like a pro, spot high probability breakout zones, set better stops and targets, and avoid a bunch of rookie mistakes. Alright, let's jump right in. So first things first, what even is volume profile? It's basically a histogram plotted on the price axis. It tells us how much volume was traded at each price level, not just per candle. Compare that to the regular volume bars at the bottom of your chart. Those show volume per time period, like each 5-minute bar or daily bar. VP flips it sideways and stacks it along price levels. That's what makes it insanely useful for spotting hidden supply and demand. Here are the key parts. POC, the point of control. This is the single price level with the highest traded volume. VAH and VAL, value area. Together they define where about 70% of the volume occurred. High volume nodes, areas where price tends to slow down or balance. Low volume nodes, these often act like highways where price moves fast because there's little liquidity. If that sounds a bit abstract, don't worry, stick around, you'll see it live on the chart. Here's that comparison I promised. TPO charts, time price opportunity, come from classic market profile. TPO tracks how much time price spent at a level. VP tracks how much volume traded there. Sometimes they overlap, but they're not the same. Example, a market can stay at a price for hours with no real volume. TPO will flag it, VP won't. For volume-driven strategies, like what we use in VolProfit, VP usually gives you cleaner levels to work with. I'll still use TPO for certain contexts, but today we're focusing entirely on VP. Now let's get hands-on. I'm pulling up Euro, US dollar D here so you can see this in real time. Step 1. Add VP to your chart. In Trading View, go to Indicators, type Volume Profile. You'll see different types: Fixed Range, Session, Visible Range. Visible range plots based on whatever's currently visible on your screen. Fixed range lets you drag and select a custom window. This one's gold for backtesting a specific move. Session resets each trading session, awesome for intraday scalpers. Look here, see how most of the volume is sitting right at this price cluster? That's the POC. These upper and lower lines, VAH and VAL, basically tell us where the fair value zone is. Above VAH, we often get rejection unless the market's trending strong. Below VAL, same idea. And check out this empty space, very thin volume. When price breaks into that zone, it often slices straight through because there's nothing to slow it down. Alright, now let's spice it up. Here's where VP gets really powerful. 1. Breakout through low volume gaps. These are my favorite for momentum trades. Once price crosses a thin area on VP, it often accelerates because there's not much liquidity. 2. POC shift strategy. Watch how the POC shifts over time. If POC keeps migrating higher, that's often a bullish sign. Volumes building at higher prices. 3. Combining VP with classic support resistance. When a VP level lines up with a horizontal SR level, that's a high confluence zone. 4. Volume gaps and mean reversion. Sometimes price returns to fill in a low volume pocket, great for fade trades. Think of these low volume gaps like empty highways at 2 a.m. Once a car hits it, boom, it flies. Now a big mistake I see all the time. People use VP on a 1-minute chart and expect the same levels to hold on a daily trend. Always remember, higher time frame VP levels carry more weight. Daily or 4-hour profiles often act like major walls for price. For risk management, place stops just outside the value area you're trading. For longs, under the VAL. For shorts, above the VAH. This way you're not fighting the bulk of the volume. Before we wrap up, let's hit some classic rookie mistakes. Chasing the POC blindly without context. Forgetting to check the trend. VP isn't a magic wand. Overcomplicating the chart with too many VP ranges. Ignoring how liquidity changes during news events.
Good afternoon.
Avoid this, and you're already ahead of 80% of retail traders. Alright traders, that's a wrap on volume profile. You've learned what it is, why it matters, and how to actually trade with it. Remember, VP isn't about predicting the future, it's about understanding where the market's been doing business. If you found value in this session, smash that like button and subscribe to VolProfit so you don't miss the next deep dive. Coming up, we'll tackle order flow and footprint charts. Drop a comment below with your questions or your favorite VP trick. I actually read all of them. Trade smart, stay disciplined, and I'll see you in the next one.